Aloha, my name is Kalana Johnson and I am the owner of KJC Tax. Today I want to take a moment to discuss some tax tips for the self-employed individual. So let's get started. The first step is to understand how workers are defined by the IRS. The first type is an employee. An employee in general is anyone who performs services for an organization, such as a business or nonprofit, will be considered an employee if the organization can control what work will be done and how it will be done. An employee may have a written employment contract with the organization and generally receives a specified wage or salary. The second type of worker is an independent contractor. This is a person that provides a service on a contractual basis. Working as an independent contractor is one way of being self-employed and generally includes workers that are in the gig economy. The third type is self-employed. Self-employed workers are individuals that typically find their own work rather than being provided with work by an employer. Their income can be earned from a service, trade, or business that they operate. Now let's look at some examples of individuals who may be considered self-employed workers. The key word in that statement is may, because some workers in these categories may be classified as employees depending on the terms of the relationship with the business. So some examples are subcontractors, home builders, landscapers, electricians, trade workers. Freelancers such as artists, writers, graphic designers, musicians, per diem nurses and other paid by the day workers, childcare providers and house cleaners, nail salon technicians, beauticians, barbers and hairstylists, delivery persons, car service and ride-hailing drivers, food cart, food truck vendors, coaches, referees, and camp counselors, independent consultants, doctors, lawyers, and accountants, IT professionals and software developers, real estate agents, election poll workers, and any other independent professional workers. Now let's take a moment to look at the key tax forms for self-employed individuals. The first form is the 1099 NEC Non-Employee Compensation Form. This form is used to report non-employee compensation and replaces the use of Box 7 on the 1099 Miscellaneous form. Independent contractors and self-employed individuals will receive one from each client who paid them $600 or more in a calendar year in non-employee income. The second form is the 1099-K, payment card and third-party network transactions. This includes the gross amount of all reportable payment transactions. A reportable payment transaction is defined as a payment card transaction or a third-party network transaction. Examples are PayPal, Shopify payments, Square, Wix, Cash App. Each of these has a threshold that has been set by the IRS for when a 1099-K needs to be issued. For PayPal, Wix Payments, Venmo, Stripe, QuickBooks, and Cash App, that threshold is a minimum of $20,000 in gross incomes or 200 charges received for the calendar year. In the case of Square, the threshold is a minimum of $600 in received payments for the calendar year. Please note, both of these forms are sent to the IRS, so please make sure that you include them in your federal tax forms. Even if you do not receive either of these forms, all taxable income must be reported on Schedule C. So moving on and dealing with Schedule C. Schedule C is based upon your record keeping. So here are some examples of good record keeping that you can use. Number one, keep your copies of checks or money orders that you have received as payments for your services. Number two, Keep receipts and invoices for payments that you made or expenses. Number 3, credit card statements and receipts used to pay expenses. These can be used in place of the receipts and invoices if you don't have those. Number 4, bank statements, deposit slips, canceled checks. Bank statements are a great way to quickly be able to show your income coming in as well as going out if you use your debit card. It is advised that for businesses, you get a separate business account from your personal account. This will make it easier at the end of the year for you to use this information. The next tip is invoices, credit card sales slips, cash register receipts. You want to keep all of this information. Daily ledgers that list your cash income. What that is if you want to use a journal and write it down each time. For example, today, Jane Doe gave me $50 cash for providing a haircut. That can be recorded in a daily ledger and used at the end of the year to justify your income. The last one is mileage logs for travel to perform business or self-employed activities. You must be able to substantiate any expenses, deductions, and credits claimed on your tax return. Records should contain enough information to correctly determine the totals of gross receipts, self-employed or business expenses, and inventory asset purchases. Receipts and other documentation should be retained up to 3 years after you file your tax return. Now, I want to pause a minute to address a group of workers that is becoming heavily prevalent, ride-sharing drivers. You can deduct your car expenses and mileage related to the business use of your vehicle. There are 2 ways to do this, and you must choose one or the other. You cannot do both. The first option is you deduct your actual car expenses, which include depreciation or lease payments, gas and oil, tires, repairs, tune-ups, insurance, and registration fees. The other option is you can use the IRS's standard mileage deduction rate for the current year. Please take note, regardless of which method you are using, you must have records that substantiate business use of your car to include a mileage log. If you use your car for both personal and business use, you must divide your expenses based upon the actual mileage. A little tip for those that may use services like My Chevrolet or OnStar services that track your mileage and trips for you for your car. Those are great ways to easily get your total mileage for the month and make it easier for you to differentiate your business mileage. What do I mean by that? For example, for my car, I use My Chevrolet. My Chevrolet for October may have said I had 496 miles total driven in my vehicle. But if I know my business trips are only 4.7 miles each and they're only happening certain days of the week, it's now easier for me to differentiate between the two. Your tax form will ask you for both amounts if you're using actual expenses. It will ask you personal use, it will ask you business use. So you need to be able to show your total driven mileage if your car is used for both purposes. Here is a list of a few of the available deductions for businesses. And I will not go through all of these. You can read it. You can see what is available for you to deduct. Please understand this is not a full list of every single deduction available, and understand that just because it's on this list does not mean you are eligible to deduct it. So please feel free to contact me and we can look at your specific business tax situation and determine what deductions apply for you. I want to take the time to say thank you for watching our video. I hope that it gave you some tax tips as a self-employed individual. If you have further questions or need assistance with your own personal tax situation, please feel free to reach out. Our contact information is shown at the bottom. Thank you for watching, and please feel free to share this video.